Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Pamar.
Welcome to Wealth Matters podcast. Hope all of you guys are doing great today. I'm going to talk to Mr. Emmanuel Daniel. He's a global thought leader in the future of finance. He's an entrepreneur, writer, and listed as a top 10 global influencer in the Fintech Power50 list for 2021 and 2022. So today, we'll talk about a lot of stuff because we have someone like Emmanuel's caliber with us. So we can talk about, of course, the finance industry. And as you guys know, I love blockchain. I talk about cryptocurrencies a lot. So we'll, of course, ask him about cryptocurrencies as well. His next book, The Great Transition, The Personalization of Finance, is here. It was released actually last year, if I'm correct, right, Emmanuel? And it
That's
covers
correct.
how the US has shaped worldwide financial innovation. So we'll talk about that as well. So welcome, Emmanuel.
Alpesh, very happy to be on your show. There is a whole range of things that we can talk about. And as you had introduced me correctly, I come from the banking industry, and I spend a lot of time, trying to describe the changes that finance is going through today. And that works right into your message about alternative investments and so on.
Yep, it's very important to know because even though we invest in alternative investments like real estate to cryptos and a lot of other stuff, gold to precious metals and strategic metals or rare earth metals, etc. But they all are tied to the economy, right? In the end, we got to understand how the economy works. So let's start with this question, which I ask everyone. Tell us something interesting or funny about yourself.
That's a funny question. Something that's interesting or funny? Well, I think that I'm at a stage in my own life where I don't really work anymore. So if I did something, I do it because I like doing it. It's January now. I spent December on the longest day of the year in the Antarctic, and I thought that was a big to-do list. I've been to 110 countries.
Oh, wow.
And after I passed 100, I said to myself, you know what, I should do the remaining 95. And then I looked back and I said, how did I get to that 100? And then I realized it took me about 28 years, just about the time of building the business that I have, the Asian banker originally, and today it's Tab Global. We have several branded assets, wealth and society, stuff like that. And I realized that in building the business, I've had a reason to go to many countries and then some because, I like traveling. And then there's another 95 countries to do. And I divided it, to like 10 or 12 countries a year. It takes about 8 to 10 years to complete the remaining 95. And then I said to myself, you know what? It's not a bucket list kind of thing. If I do complete them, it's only because I've taken my time visiting all of these countries, understanding them, and then looking at, most important of all, is looking for common themes between countries that initially may not look like they have something to do with each other. So I'm connecting the dots. If you want to put in a short sentence, in terms of what makes us similar, what makes us different, and the themes that are driving the economy, the development of the different countries around the world.
Oh, that's great. So let's talk about 110 countries. That's amazing. So let's talk about investment. What was your very first investment?
Well, if you ask me, my very first investment would have been my insurance, account, which was an endowment policy when I just came out of university. Today, to be honest, the way insurance has gone, an endowment policy is perhaps not the best investment.
Right.
But I was a kid then, so I have that, and it's a done deal. But the insurance companies, the way they have managed their investments, they've not done a very good job. So they ask you to continue to be invested today. And their product range has changed dramatically over the years. So that was the first investment, I guess, that I've done. But after that, of course, I've got 2 properties of my own. I've got alternative investments. I do collect art. And then I'm now invested in crypto. I'm a firm believer in the importance of crypto in the network economy that's coming, and I have my views on crypto in general. And of course, I'm looking at new investment classes. I think that to fight inflation, the way in which it's going right now, we absolutely need to be invested in a range of alternative investments that can absorb the inflation that is already underway. It's not going to abate anytime soon. But what's interesting is that some investment classes or asset classes absorbs inflation better than others.
Hey, no, this is great actually, and I love blockchain. I love crypto. We raise capital, and we have our own Bitcoin mining funds, and we have raised close to 50 million for Bitcoin mining funds since for a couple of years, and of course, last year was not good, but finally it's coming back. So, do you think that bear market for crypto is over, or it's something else brewing?
The fundamentals of crypto are very well in place. You mentioned the book that I had written, and the book that I had written was directed to people in the finance industry, in the traditional finance industry,
Right.
banking, insurance, the fund management industry, and trying to map out for them how finance itself is going to be evolving because of crypto, because of the token economy. So that's why the title of my book is The Personalization of Finance is Here, the Great Transition. There's a great transition underway today that even bankers need to understand. So I'm telling bankers, for example, that the deposit account, the most beloved of their
Yes.
product range,
Correct.
is a done deal. It's
Yeah.
over.
It's
Um,
going.
you know, and and bankers don't get this because they cannot imagine their industry without the basic deposit account. But look at what bankers are doing to you for your deposits. They're giving you back nothing.
Right.
They're putting it on their treasury and their trading platforms and their own internal platforms, and
Right.
they're having it invested. Making lots of money and not passing on the profit to you. And then what's happening on the user side of the basic deposit account is that we're all moving into digital wallets.
Right.
Not just crypto digital wallets, but
Even
also
just,
just
yeah.
basic electronic money, basically. So something about the way in which we interact with financial institutions has to go into something that is connected with the network economy that we are increasingly becoming a part of. Now, so the thing about crypto is that it's got its Ponzi element, I call it, and people in crypto don't like it when I talk about this, which is the valuation of crypto as a security or as an investable asset. And we are at the point where we value crypto for its ability to rise in value, and that applies not just to blockchain, but all of the tokens that are being created in the
Right.
gaming business and so on, and that sort of distorts the real value of crypto. And the real value of crypto is in the utility of crypto and the necessity of crypto in decentralized finance, in in the token economy that is being built. And I'm just amazed. I completely follow all of the developments taking place on the utility side. The applications being developed by hundreds of thousands of programmers, and the importance of having a token to navigate your way in the token economy. Now, what I try to point out in my book is that the world is in a transition. So when you hear, Warren Buffett or Charlie Munger's, putting down crypto and subjecting it to the same rules, same rules as securities, as shares, right. And as funds and so on, they're not wrong, because crypto as an investable asset is subject to the same rules as any investable asset, whether it's securities, bonds, and subject to the market, subject to the liquidity being created by the Feds, subject to trade and inflation and all of that. But there is, and I say this in my book, which is that the world is moving to a new economy called the networked economy, and there crypto is the native driver. We're going to be forgetting a lot about what we know about traditional banking, traditional finance, and we're going to be moving into that to that realm. And in that realm, the network effect is the determinant of value of any token. The network itself has a value, and even you and I as individuals have a value in the network depending on how networked we are. So the new rules coming through in the network economy that the Warren Buffetts and the Charlie Mungers, they are not native to that ecosystem. They don't know what's actually going on in the network economy. They haven't factored that into their thinking or their way of thinking. So the thing about crypto is that now is the time to accumulate. Just keep accumulating. I'm not worried about the way in which the valuations have been sliding up and down the scales. And the magic of crypto is not that Bitcoin went up to $65,000 and it's now down to 20,000, 22,000. The magic of crypto is that each of us, you, me, can issue a token, that is personal to us, and then the tokens that we issue needs to go through a process of being accepted, by other investors, as well as having a utility that makes it useful in the network, whether it's staking, whether it's lending, whether whatever the application should be, and that's where right now we're going through all the fraudulent experiences that you're seeing in the market right now. Yes. We're going through a process where the governance and the structure of this new industry are being put in place. So I'm not afraid of all that's happening in the crypto space right now. The rules are being put in place. In fact, I put my finger on the technology. The technology continues to work exactly how it's supposed to.
Yeah, exactly like how Aave is working or Uniswap is working. Even Aave was able to call all their loans due from FTX and whatnot. So that means the technology behind it's still working and actually working well. It's the centralized players who are messing this up because, of course, they are greedy, right? They are either over leveraging or they are, of course, Sam Bankman-Fried. They are trying to fraud everyone else around them. So yeah, no, it's pretty interesting. I want to talk about, because I was reading your bio and looked at the book, and you talk about the financial crisis. What is the next financial crisis?
So I actually end my book by imagining what the future or the next financial crisis will be. And this is how I explained it to the bankers, okay? That is, that look at the financial crises that we've had since the end of Bretton Woods. Bretton Woods was the moment in which President Nixon said that the US dollar will no longer be tagged to the price of gold. And that started in 1971. It was perfected by 1973. And the world has been on a journey since. And the effect that it's had on the banking industry is that when the banking industry had its first crisis after the end of Bretton Woods, which was in 1984, and they called it the savings and loans crisis, that was a crisis where the average bank's balance sheet was predicated by real mortgages, and the banks were not able to manage their assets and their liabilities, both sides of their balance sheets, and many of their customers were invested in real mortgages for about 7 to 30 years, and the banking industry in the U.S. wasn't able to manage its cost of funds because the cost of funds had become floated into the global economy by that time. Then you look at all of the other crises that have happened since. Then 1987 was the securities crisis. It wasn't hard mortgages. Then in the 1990s, there was the Mexican crisis, the Asian financial crisis. Right. These were based on trade and the globalization of the dollar, the effect it has had on emerging markets. And then by the time we reached the 2008 crisis, it was not even underlying securities like it was in the 1987 crisis. It was derivatives of securities, yep, and futures and so on. So there's a pattern taking place, which is the crises are becoming increasingly what I call ephemeral. That means that they are no longer based on any underlying security or an underlying hard asset. And we've now arrived at a point where we're dealing with crypto, where the value of any crypto is based on perception of its value. So, it's not wrong to say that blockchain is not based on any underlying asset. Isn't that true? I mean, that's amazing. Right. Yep. Today, an asset that doesn't have any underlying, hard asset on which it's based. But that's the economy that we've created, because it is this token that goes into the network economy and has a utility in the network economy. So what I'm saying is that the next economic crisis and the economic crisis after that are increasingly based on no underlying security, and increasingly based on perception of markets, of investors, of memes, meme stocks, and just basically perception. So that's what I'm saying about the next financial crisis. You will hear that the economists like to think that all financial crises are the same. They have the same drivers of supply and demand, of greed, of asset inflation, and so on. But the underlying asset itself has been morphing over time. And the rules by which the next economic crisis will be played will increasingly be based on something very ephemeral, just public perception. And public perception itself has become a network phenomenon. When we think about the Reddit crisis just 2 years ago, GameStop, the meme crises that we're having today. And in fact, think about the new securities, the specs that are being generated today. They get into valuations of billions of dollars, and then they lose that valuation almost immediately. And so the rules for the way in which we think about asset inflation, about protecting our assets, has changed dramatically. And we need to embrace these new rules in terms of how to protect our alternative investments and play the game for the long term. What's interesting is that the underlying currencies in which we make our valuations are themselves becoming ephemeral, meaning that the dollar, what is the worth of a dollar today? You may think that you're holding a dollar, but when you go out there into the streets and try to buy something with a dollar, you realize that it takes more dollars than it used to before, and that sort of creeped up on all of us. Because valuations are not just based on FX and trade policies, but on the incredible amount of liquidity that's being created into the marketplace. So these are all the factors that we need to start thinking about when we think about not just alternative investments, but investments on a broad scale.
So, and when do you think, and from where would this next financial crisis would start?
Well, we are walking into one right now.
Right.
It starts with the perception of the world's most important economy, and that's the US.
Yeah.
And what we're walking into right now has to do with the perception of all of the other economies' trust in the US' ability to meet obligations, to meet its credit demands. The US as an economy has always grown on the back of credit creation. Always, from the first day of its creation, the War of Independence, down to the Civil War, and then into the 1990s and so on. The U.S. economy has been built on the ability to issue debt, and over time, that ability to issue debt was funded by all other economies. In other words, other central banks buying U.S. Treasury bonds in the belief that the U.S. will be able to meet its Treasury bond commitment. But what's happening right now, and in fact, we've seen, like right now in Congress, you have this huge debate on the ability to raise the debt ceiling, and we've had this this brain crises happened several times in the last 20 years. So this debate and this self-manufactured crisis of the ability to meet its commitments, we've seen this drama many times, except that now, in fact, in 2011, when the U.S. went through its debt crisis ceiling again, what happened was the rating agencies, rated the U.S. Ability to pay its debt one notch lower, and that should have, if it was any other country, it should have created incredible crisis on its ability to pay its debts. But what was interesting is that the rest of the world immediately bought even more treasury stocks, because that was the only trusted security that was global, that was liquid, that other central banks could trust. But this time, right now, many countries around the world are reducing their holding of treasury stocks dramatically.
Right.
In fact, China has reduced it to below $1 trillion. So this is a historical low. Right. Switzerland, all of the blue chip countries, Switzerland, the EU, and the large countries, India, Indonesia, Vietnam, almost every economy that holds treasury bonds have been reducing their holding of treasury bonds. So what does that mean? It means that the ability of the U.S. To issue undeterminate amount of debt is now in question, and the ability of the rest of the world to absorb that debt is in question. And that will have a profound effect on the global economy, because besides China, which is driven by the ability to manufacture goods at the lowest price possible. The US is actually the great absorber of consumption in the world. So it's if it slows down its ability to consume, it has a global effect. Just like I was saying, this crisis is driven a lot by the perception of the rest of the world of the US ability to meet its credit commitments. In fact, last year, the US economy had gone beyond its ability to meet its financial commitments, because the total debt of the economy was like 29 trillion. It's now 32 trillion. The GDP itself is only about $20 trillion. Right. So the ability to meet that is now a moot point. So we need a new game changer that needs to come in place. And the game changer can take place on several fronts. It can take place on the forex front, which is the way in which the US dollar trades with other currencies. It can also come in the ability to issue new securities. And the most profound of new securities is digital currency. Right. Just imagine this: if the US accepts any form of stable coin as an alternative to the dollar, it immediately creates a new asset class that is globally invested in and has a great utility on the network economy, and then it extends the US ability to issue debt going into the future. So that's what I've been talking to bankers about, and your viewers might find it interesting that there is this thinking in the industry.
So I have another question. We spoke about US dollars and China and India. Which country do you think will become the next leading economy? Because everyone is talking about China and India.
I know that the conversations in the US is, the dollar might lose its global dominance, and therefore there might be a replacement and so on. The rules by which a currency becomes dominant include, number one, it has to be incredibly liquid globally. Number two, it must be free floating. In other words, it must be available. It must be subject to FX rules, and every country that deals in that currency must have access to it and must be able to influence the valuation of their own currencies against that currency. Now, what's interesting is that there is no other country in the world that allows its currency to be floated the way the US dollar does. Right. Now, having said that, there are very important movements. Saudi Arabia is saying that it will now accept payment for its oil in currencies other than the US dollar. Now, when Saudi Arabia says that, it has to be bilateral. In other words, it has to make deals with specific countries on one-on-one. It's not a global trend. So if they're selling oil to China, for example, the Saudi petroleum company has to open a bank account in China, and it has to be invested in China, and then they have to have procedures by which they can get that money out back into Saudi and so on. And in that way, the BRIC countries, the large countries of the world, China, India, South Africa, Brazil, they're saying to themselves that, is there an alternative way in which we can trade? So none of these other alternatives come to the ability to replace the dollar, they will have to accept a certain risk of not being able to control their own currencies if they put it out into the global marketplace. And the second thing is that when a country issues debt that are bought by other central banks, what it's saying is that it's working for the rest of the world. And the US was fine with that. But imagine China issuing, debt which they are not, because it's exactly what they don't want to do, which
Right.
is to have other countries hold their debt, and the Chinese economy has to trudge at a certain pace
Right.
in order to meet those commitments. So the short answer is that the U.S. is not necessarily losing that dominance that it has in the global economy. And in my estimation, what will probably happen is exactly what happened in 1971, which is the U.S. itself will change the rules for the rest of the world.
Uh,
Okay, and that's what creates the digital economy,
right.
the move into crypto and so on, that are now coming into place. So that's my take on how this crisis will evolve.
So that's awesome. Another question I have for investors: where should U.S. investors invest right now?
Well, short term, play the FX, because there are a number of undervalued currencies, the Swiss franc,
Swiss franc,
for
yeah.
example, which is super undervalued. The Swiss are scrambling, to find the right valuation for their currency against the dollar. And the Singapore dollar, for example. And now I come from Singapore, so I shouldn't be saying this, because the Singapore authorities or the Singapore Central Bank doesn't make the Singapore dollar as available globally, as it
Right.
should. But these are what we call defense currencies. They are the currencies that you go to in times of crisis, because the central banks of these countries manage their currencies very well. So that's an arbitrage against the dollar in the short term. In the long term, I think as long as the dollar is stronger than the rest of the world, there are investable assets, property in Portugal, for example, which is very popular because it comes together with residency and
Right.
um, you and so on. Except that when you get to Portugal, you realize that you got to look for a job, and so your job better be plugged to the rest of the world, or your client base from Portugal. Where should a US person be invested in? I think that being invested in crypto is the best way to be plugged in globally.
Right. Right. No, thank you. So this was great. Thank you so much for sharing your knowledge with our audience. Are you ready for fire round?
Okay, let's do it.
Would you be changing any business or investment strategy because of this inflation or the impending recession?
Nope. I've started my scheme, my portfolio on crypto, and I keep going on that in that direction.
Right. Favorite investment or real estate or finance related book?
Uh, Real estate to start with, because that's an industry that I understand, and then digital currencies.
Any tool or website you recommend or you cannot live without?
Ah, well, Wealth Matters is good. I think that you do a lot of thinking through your talking. In other words, anyone listening to you is not just listening about investments, but also how you think about them. So I think this is a platform that I'll keep coming back to. Anything else that I cannot live without? There are a couple, but nothing that comes off straight out of my mind.
Thank you. Any advice for beginner investors?
Build a portfolio, accumulate. Today, a lot of the alternative investments are overvalued, mainly because of the liquidity that's been created by the Fed, and that's going to be absorbed by the rest of the economy. So this is not the time to go all in on any one investment, but to accumulate. Only go all in when you see a good bargain.
Thank you. How do you give back?
I mentor entrepreneurs. I do everything from having coffee with them, to looking at their their proposals, and just replying emails on a continuous basis. That's as much a part of my life as in doing my own investments.
That's great. How can my listeners reach out to you?
EmmanuelDaniel.com. That's my blog page, and then from there, more on my book and my ideas as they evolve. There are lots of lies in the financial industry,
Of course.
so that's where I try to do my part to make sure that the conversation is as clear and as truthful as possible.
Thank you so much, Emmanuel, for your time. Learned a lot today, and especially you also solidified my belief in crypto. So I appreciate that.
Thank you, Alpesh, and all the best. You do a great job, describing what you're doing, sharing your portfolio, and also sharing your thoughts as they evolve. So not everything you've said, came true, but we know how you're thinking. So that's a big contribution to your audience.
Thank you so much.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!